Talking business news now, and I'll start off with the state of the Nigerian economy as we have the latest consumer price index, which measures inflation out now. Now, this figure increased to 15.7% on a year-on-year basis in the month of February this year. That's according to the latest data from the National Bureau of Statistics just released. Now, this is 1.63% points lower compared to the rate recorded in February last year. This means that the headline inflation rate slowed down in February when compared to the same month in the previous year. On a month-on-month basis, the headline index increased to 1.63% in February this year, recording a 0.16 percentage point rate higher than the rate recorded in January 2022. Urban inflation rate increased to 16.25% in February from the earlier report in February 2021, while rural inflation rate also increased to 15.18% from the 16.77% recorded in February 2021. The composite food index rose by 17.11% in February this year compared to the 21.79% recorded in February last year. Now, the rise in food index was caused majorly by increases in the price of bread and cereals, potatoes, yam and other tubers, oils and fats, as well as fruits. And now, still looking at the commodity market, the average price of bread and rice in Nigeria have been recording significant increases in the past 5 years, and that's according to the latest report from the National Bureau of Statistics. The NBS in a selected food price watch report disclosed that on a year-on-year basis, the average price of unsliced bread from January 2017 to January this year recorded 42%, while the prices of agric sold loose rice recorded 48% price hikes. There were also an increase in price of locally sold loose rice, medium grained rice, as well as imported high-quality sold loose rice. That's for the 1 kilogram each from 286 naira, 312 naira, and at 402 naira as of January 2017 to 430 naira, 477 naira, and 579 naira respectively as of January this year. This was despite a drop in overall inflation from 18.72% as of January 2017 to 15.6% as of January 2022. The country is, however, still struggling with double-digit inflation, with the World Bank projecting that Nigeria may record one of the highest inflation rates globally this year, with increase in prices diminishing the welfare of Nigerian households. And away from inflation-related matters now, power generation on the national grid collapsed to 0 megawatts around 10:40 a.m. and went on Monday, leading to widespread blackout across the country. According to grid operations report, the system is yet to pick up load, which shows that just 3 generation companies are trying to restart but were yet to generate any energy. Power generation companies had on Sunday blamed the incessant blackouts across the country on the weak infrastructure of transmission and distribution companies. And meanwhile, as at the time of the filing of this report, the Minister of Power, Abubakar Aliyu, has also summoned an emergency meeting with all the stakeholders in the power sector to address the low electricity generation, which has caused epileptic power supply across the country. The power outages currently being experienced in the states have also forced many businesses which depend largely on the public power supply for their operations to suspend their services. And now in this next report, economic analysts and entrepreneurs have emphasized the need for major reforms in the fiscal and monetary policy space to support long-term inclusive growth and sustain macroeconomic stability this year. They made this known at the 5th edition of the annual Bridge Club Retreat in Lagos, and Blessed Omonose reports.
After enduring the economic turbulence of 2021, most Nigerians had hoped for a better year this time around, banking on the 2022 budget to give them the much-needed respite against the nation's crumbling economic structures. But with the current economic variables coupled with the ongoing Russia-Ukraine crisis showing signs that the worst is not over yet, causing a bleak possibility for the outlook of the Nigerian economy in 2022. This, among other issues, formed deliberations at this gathering of entrepreneurs and professionals under the aegis of the Bridge Club to meet minds and develop a strategy for coping with the present challenges. In this presentation, the Chief Executive of the Center for the Promotion of Private Enterprises, Dr. Muda Yusuf, gave an insight of the impact of the 2022 budget on the business community.
Talk about budgets. It's essentially about appropriation. But there's always a policy side to budgets. It doesn't come in form of the figures, but it comes in form of the associated policies that come along with the annual budgets.
Speaking on the state of the economy, the president of the Bridge Club urged Nigerians to be optimistic for a positive outlook.
Nobody will fix Nigeria for us. We're all going to fix it together. And the way to do about it is to harness energy and get onto finding solutions to the problems, which is an opportunity, and that's what an average entrepreneur should be looking at.
Our budgeting system should encourage education. When you look at the Human Capital Index, government is meant to do about 10 to 15% of its budget on education. We're not doing that today. When you look at what we've done in Nigeria, it's less than a single digit. So, in honesty, investment in education should be #1 priority for a country like Nigeria.
In order to generate a desirable outcome in 2022, it is imperative for government to create policies that will chart a sustainable path for the growth of the development of the Nigerian economy. Blessed Omanose, TVC News.
And now shifting focus to the international front, stocks are in the red today as surging COVID-19 cases in China hit the confidence of investors already worried about the Ukraine-Russia crisis and the first US interest rate rise in 3 years that could also come this week. MSCI's broadest index of Asia-Pacific shares outside Japan fell 1.97%, led by pronounced weakness in Chinese stocks. The index is down 8.2% so far this month, and Hong Kong Hang Seng Index remains mired in the negative territory today, dropping 4% following an almost 5% sell-off a day earlier. Hong Kong's main board is down 17% so far in the month of March, and the city's tech index has been hammered, falling nearly 30% this month as investors worry about the next regulatory crackdown from the United States and Chinese authorities on the sector. China's CSI 300 index was down 1.78%, pushing its losses for the month out to 11.2%. Australian shares, on the other hand, closed down 0.73%, shrugging off the weakness in Asia. However, stock futures for the S&P 500 rose 0.21%, while Tokyo's Nikkei index reversed its losses and was marginally higher, up 0.22%. And wrapping up business news now, oil prices on the international market extend losses today, sliding to a 2-week low as ceasefire talks between Russia and Ukraine ease fears of further supply disruptions and surging COVID-19 cases in China fueled concerns about slower demand. US West Texas Intermediate crude is recording a price dip of 5.39% to hit $97.46 per barrel. Brent crude now sells at $101 per barrel, registering a downward price margin of 5.51%, and Bonilite's performance is still low in the red territory with a drop in price of 5.86%, selling at $106.80 per barrel. And for the OPEC basket, crude oil dealers offer $113.30 per barrel, with a decline of 3.36%.